another video. If you are new here, please smash that subscribe button, and if you enjoy the content, please hit that like button. And as always, if there's any pair that you would like for me to analyze or any video that you would like for me to discuss, please leave it in the comments down below, and I'll be more than happy to do it in my next video. So today I want to speak about something very interesting, and that is how to trail your stop loss. Now I understand that on MT4 you've got an automated stop loss, so you can trail your stop loss automatically. But what happens if you don't? If you're on your phone and you don't know, and you can't make use of that option. Well, it's quite simple. Normally we take entries on lower time frames. So I want to speak about. I'm just going to go through the 4 hour, and I want to show you exactly how you need to trade your stop loss. Now, let me just make an example for you very quickly. Let's say you're the kind of trader that likes to buy when the market breaks a previous high, and you'd like to buy on the retest. Now, USD is a good example because if you've missed the breakdown, I've made a breakdown of this and I explained for all of the reasons also why we were going to see this massive break, and that is exactly what happened. But I'm not here to speak about that. If you do want to watch that video, it is down. It is in one of the videos discussed below as well. Now I just want to give you an example. So let's say, for instance, you are a breakout trader, someone that waits for the market to break above a level of resistance, and you just go boom, buy on the retest. Now let's say that this is where you would have bought the price, your take profit would have been there, excuse me, and your stop loss would have been below this previous low. Now, the way in which you now need to the way in which you want to trail your stop loss is you always want to trade your stop loss according to the structure in the market. Now, what does that look like? Firstly, we need to identify price actions, so support levels and resistance levels. Now, as I always say, that you get resistance in the market and you get support, and once support gets broken, it becomes resistance, and once resistance gets broken, it becomes support. Are we going to apply the same concept here when we trail our stop losses as well? So let's say, excuse me, you got your entry in there. Now, excuse me, the first thing you want to look for is where the market created structure, or when the market creates new structure. So we can obviously see that this is now a level of resistance in the market. So this was the previous resistance. That resistance got broken. The market created a new resistance. And like I said before, it's when the market prints a red and green candle next to each other. By definition, there is structure in the market. Now, what you want to wait for is, you want to wait for the market to do the same thing that it did here as well. So you want to wait for the market to create and break structure, and then on the retest, what you want to do is you want to move your stop loss to break even. What does that look like? So you got your entry in there, the market created structure. What you want to wait for is for a 4 hour or a 1 hour candle to close above all of this resistance. Why? Because we know when the resistance gets broken, it becomes support. So after the market created and broken below the structure, what you want to do is now you want to put your stop loss to break even. Why? Because we know by definition, when the market created this level of resistance over here, when that resistance gets broken, the market would then turn that resistance into support, and by definition, support should then be rejected and the market should continue higher. So, and you can see this is exactly what had happened on this market over here as well. The market printed level of resistance, the market broke above resistance, our order got filled over there, our stop loss was below this previous level of support over here, and then the market printed this level of resistance. Once the market printed this green candle there, a close in a break and a close above that 4 hour, then it would be safe for us to move our stop loss to break even. So now we would put our stop loss right over there. So we put our stop loss right over there. So it's obviously good to make sure that you put a few pips in profit, because you obviously want to make sure that you pay your broker for whatever spreads they charge. Now let's follow the trend over here. Now the next thing we can see is this was the first level of resistance that got broken, or this was the first level of resistance which got broken. We then got in here, the market then printed new resistance, the resistance got broken. You can see how the market printed this red and green candle there. So that was now the new level of resistance, and once the market printed this green candle, what you would then want to do is now you want to move your stop loss, excuse me, now you move your stop loss to that previous level of resistance that was once support. Why? Because when the market broke above this level, your stop loss would now be protected by this resistance, which is now turned support. So if the market had to pull back, we would have expected the market to hit that level before continuing higher, in the same way the market broke above this level of resistance before continuing higher. Now you can follow the move. Once the market prints a new candle or a new red candle, what you then want to wait for is, let's say the market prints this, a red candle over here. Let's just make that nice color there. Let's say the market prints this red candle over here. This level would now act as a level of resistance. And what you want to wait for is, you basically want to wait for a green candle to close above this level over here. Let's just do that. There. So you want to wait for a green candle to close above that to confirm the break of structure. Then what you want to do is, now you want to move your stop loss to this level over here, because now your stop loss is protected by this structure. And this is basically how you trail your stop loss from a how you trade your stop loss based off market structure. And this is the best way that you want to use, or the best method that you want to use in order to trail your stop loss. Now, why do I say that? Because the market for many years has moved one way, and that is creating an impulse correction, an impulse pattern. And also, one thing to keep in mind, that the other reason why you also want to trail your stop losses like that is because it provides you certainty. Why? Because the last thing you want to do is, you want to be in a buy trade if the momentum or the market had shifted a direction. So what would that look like? So let's just say, for instance, that none of this had happened over here. So I just want to remove this very quickly. So let's say none of that had happened over there. Let's say the market created this structure. Okay, so the market broke above that structure, but your stop loss is still at that level. Now the market breaks below that level and it comes back for the retest. Now remember, this was a level of resistance that got broken. Now all of the support did not hold. Now all of that support becomes resistance. And remember, when support gets broken, it becomes resistance, and by definition we expect the market to go lower. So then what would happen is, the market would then continue to melt down lower, and you'd probably lost more than what you would have if you just told yourself, okay, we've got structure here, so I'm going to put up my sales and I'm going to make sure that my stop loss is protected by the structure in the market. If the structure does not hold, it's fine. It just says, it just shows to us that we got out of the trade at the right time as well. Now guys, that's it for today's video. And as always, if you enjoyed it, please smash that like button. And as always, you can share the video to as many people as you'd love to. And once again, thank you so much for your time, and have a blessed day further. Now, cheers for ears.